The stock market keeps being scary and no one knows what's going to happen. We know the heights seem to be here, the market tops, and the scary action last week made a lot of people nervous. I had some videos out on that, but it's important to stay tuned and focus on the latest developments for this week and the coming week. As you know, I think December 9th, check out my video from the weekend, is a very important date because the Fed will actually start talking and releasing their next decision about a rate cut. And there's a lot of nervousness here if the rate cut actually happens or not. And if not, that would be very bad potentially. But I want to share today what I'm doing in this whole situation that is scary and why I'm actually not that concerned, and give you 3 reasons why I believe we can sleep calmly at night. Unless you're leveraged, you should be leveraged. So let's look into it, into the 3 reasons. Number 1, I want to talk again quickly about unemployment. And as you know, the Fed has this dual mandate about employment, and we don't know what's happening on unemployment and employment in the United States because of the government shutdown. And because we had a shutdown, there is no data. It's very scary for people because they're flying blind and they're saying, what if employment actually is very good, which is bad for the Fed decision? And what if inflation might be high? And then we have a bad situation, high inflation, high employment, and then the Fed is not going to cut. There will be not enough liquidity in the market, and we crash from these tops. And this could all happen by December 9th. Now, while we don't have government data, we have private payroll data from ADP, for example, and it shows pretty bad stuff, which is good stuff from a Fed perspective. Here, September, look at this. The worst month since March 2023. See here. And by the way, there was already a bad ADP payroll month in June. So this is actually more structural, as you can see, and it's accelerating. That's what I'm saying all the time. We are in the age of AGI, and it's actually happening now. That's why you should follow me on this channel and go to pioneerlands.net, by the way, because that's where we are discussing these things and understand the future much better than if you're just sitting alone in a basement somewhere. So it's very clear that AGI is here, artificial general intelligence. I'm not going to go into what that exactly means here, but effectively what's important to know is it's starting to replace jobs on a massive scale, and it's accelerating this scale. And we see these first little blips, right? This is all happening right now as we speak, and it's going to get exponentially more powerful every quarter from now on, which will lead to these accelerating job losses. And the people who are saying, oh, no problem, we are going to offset this with amazing innovation. Well, this is a timing issue, right? You're not creating amazing innovation that sucks up and provides all the jobs for all the people who are losing the job. The job loss rate is vastly higher than the job creation rate. That is what we are doing in Pioneerlands. That's what we have to build, a new economy that is actually ready for the age of AGI, that gives us all the benefits and creates all this amazing unlimited growth. But it's not just going to happen by itself, not if everyone is unemployed. And to turn passive workers into active pioneers is probably the most gargantuan undertaking ever in the history of humanity. It's not happening by sitting here, clicking some buttons and suddenly it happens. So no, we will see massive job losses with net unemployment going through the roof. And we have these early indications. And we see it here with the ADP private data. And the Fed knows it. They don't want to say it, but they start to notice, and Powell was already concerned. That is bad maybe for most people in the economy, maybe not the economy as GDP, but the economy when it comes to individual people. But it's good for that decisive Fed decision on December 9th. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. The next thing I want to share is my thinking about CPI, right? That's the dual mandate of the Fed. They need to keep unemployment low, and they have to keep inflation low. If they lower rates, they drive up inflation, but they also drive up employment in a normal economy. Obviously not in this economy, but that's a different topic. So we have to be concerned about CPI, but the good news is here, and that's generally good news for everyone, not just for shareholders, that shelter is 33%, so housing. right? What you pay for rent. That is 33% of the CPI of the index, of the consumer price index. And shelter is actually down. So we have deflation in rents because people are poor, can't afford it anymore. And rents are coming down. And if 33% of the entire index is going down, well, guess what? It's becoming less and less likely that inflation is actually a problem. And finally, QT is ending December 1st, quantitative tightening that's already announced by the Fed. In general, that is the first factor that makes me not too concerned about the market. Not too concerned about the market, that the Fed decision for me is more or less 95% safe to say we will see a rate cut. Now, maybe the Fed says other things that makes people nervous. If they're too negative on the economy, even with a rate cut, that could damage the whole thing. Let's see, there is risk, but I do not think the risk is that we don't have a rate cut, and the market is now pricing in a lower probability of a rate cut. That creates a differential, which is our alpha. We know the odds are extremely high. The market thinks they're not that high, which means we can make money because we are going to be right, and the market is relatively wrong. Let's go to the second important factor here, fear and greed. Before we jump into the actual statistic, the actual number on the fear and greed index, we're going to check in what that number exactly is. Is it 0? Is it 100? Or what is it in between? Just a quick primer again, in case you don't know my theory about it's a very common theory on Wall Street. You have fear and you have greed. The two most powerful emotions in the universe of money and maybe even in the universe at large. Well, at large, maybe you have love not in between. But when it comes to money, there's no love, there's only fear, or there's greed. Either you're greedy and want more, or you're very fearful. And you know the famous Warren Buffett quote, be greedy when others are fearful, and fearful when others are greedy. So you should always do the opposite. If everyone is scared in the market, you should be greedy and buy. Not on margin, but you should buy. When everyone is greedy and says, I want more, you should become fearful. Why is that? Before we look at the number. Why is that? Because stock prices and the market at large are always in equilibrium between how many people want to buy and how many people want to sell. So at any given point, the stock price, as you probably know, means you have the same amount of buyers and sellers. That's how you meet the price. If you have more buyers, price goes up. If you have more sellers, price goes down until you have the same, right? Now, guess what? If everyone is fearful, there are all these sellers and they already sold, right? When people are fearful, they're not selling, they have sold, right? That's the nature of fear. When everyone is greedy saying, then everyone has bought. Greed doesn't lead to buying. Greed leads to having bought. Imagine you're very hungry and greedy for a hamburger and there is a hamburger. What are the odds you have already eaten the hamburger? High, right? So, and there's no thing as satisfaction when it comes to money. You can never be satisfied. You can only be greedy. And at some point you can be fearful. It's very sad, but that's how it is. So what does it mean? It means when the market at large, the majority of the market, when everyone is fearful, the market can't really drop because it already dropped. That's why everyone is fearful. And when everyone is greedy, there are no buyers left. So very likely the market will drop. Maximum greed means maximum risk of drop. Maximum fear means good. It's good. You can buy because it can't go down. In order to go down, you need greedy people who turn fearful. In order to go up, you need fearful people turning greedy. If everyone is greedy, no one can turn even more greedy. So that is the contrarian indicator. The more people think it goes down, the less it can go down. And let's take a look where we are at with this fear and greed situation. Boom, we are at 22. So here's the famous CNN Business Fear and Greed Index. They have all these little criteria. You can look it up yourself. Just Google CNN Fear and Greed. So they have all the different dimensions here: junk bond demand, safe haven demand, market volatility, put and call ratio, stock price breadth, stock price strength, and market momentum. Right? And you see, for example, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear. There you have it. So we are at crazy 0.7 ratio, put call ratio, right? Very bad. That means this is very positive. We can't drop. The drop has already happened. Of course we can drop, right? This is not financial advice. But you see fear and greed index 22. This is a very green situation. You rarely see a crash after fear and greed hits like these low numbers. Of course it can go down more a little bit, but what are the odds? Does it go down or up at this point. The odds are on our side for something more bullish. And finally, point number three. Point number three is we are still in the age of AGI. When you look at what is actually happening, we are in an incredibly bullish situation from a substance perspective. Very different from what some dummies are saying, that we are in a bubble. The opposite is, of course, true, because we are seeing that the Mag 7, the big companies, the big spenders into capex of AGI are extremely disciplined companies. And nothing looks bubbly at all here. They're actually knowing what they're doing. Look at this. This shows you the forward price earnings ratios. 21 times for Meta, 26 times for Google, 30 for Microsoft, 31 for Amazon, 33 for Apple. Well, this is a little high in my opinion. I'm not an Apple fan. NVIDIA 33x, that is not high for NVIDIA because they're growing like crazy. If you compare growth of NVIDIA versus Apple, then you know how expensive 33x for Apple is and how cheap 33x for NVIDIA. And of course, we have our best stock, best friend Elon here. That looks a little insane, obviously 178x. But Tesla is a different case because on a future cash flow level, Tesla has these enormous, ridiculous, basically close to infinite multi-trillion-dollar free cash flow streams getting unlocked, which is humanoid robots and autonomous transport globally, where they have a monopoly potentially on both for multiple years. And that's the thesis for Tesla. So the 178x earnings looks, of course, extremely expensive, but only if you think earnings just keep what they are. And if they unlock two additional revenue streams that are magnitudes, multiple magnitudes, the size of what they have now, this doesn't count. So that's an exception. And Meta is probably the best idea outside Tesla in this whole thing. And Google just was bought by Warren Buffett of all people. So no, this is not how a bubble looks like. This is how disciplined execution looks like. And the fact that these people are the central drivers of the AGI revolution should tell you something. They're not dummies. They're not crazy VCs, and they're not crazy startups. These are the most disciplined 7 companies in the world, the most advanced and disciplined cash flow machines, right? With hundreds of billions in cash flow combined. And with Tesla unlocking trillions of potential cash flow very soon, with NVIDIA being the largest company on earth and all these having the potential of becoming the largest, that is not a bubble. Every chip that NVIDIA sells is completely sold out and completely utilized. No black fiber, right? Like in the internet bubble. So this is a very different situation. And when you think and learn about AI, not just in theory, but in reality, what happens on the ground? No, what happens in Cursor, Lovable, Claude, ChatGPT? Look at their usage growth. Look at their token growth. Look at the money they can charge to hundreds of millions of people who instantaneously pay them. Look at what Microsoft Copilot and Google AI Gemini is doing. And listen to the video that's coming out this week on this channel on Meta and their secret AI strategy and how they are going to transform everything. And then watch my other videos on Tesla. Then you see this is the opposite of a bubble. This is the world's and history's greatest build out of the most profitable and transformative infrastructure ever conceived by man. So, no, not a bubble. Could there be some tactical correction? Of course there could. Let's take a quick look at the stock market today. Actually, we are up 0.5 on the NASDAQ. That looked very different when in pre-market. And then Tesla, of course, our friend Tesla is going totally nuts for some reason, up 2.6%. They were negative in pre-market. So maybe Wall Street is watching this video live. I don't know what's going on. But that this means too much. We shouldn't look into these super tactical things. But I think the trend is clear. I think Tom Lee is correct. And we might actually prepare for a Q4 rally into the end of the year. You have to be cautious. I would not be on margin because there's a lot of nervousness in the market. But look at this stuff. So these are my 3 factors why I think the bull market is not over. I also disagree with some experts who say growth is over, the growth segment of the stocks, not when it comes to Mag 7 and core AI stocks. I don't think so. Still, caution is important. That was scary what happened last week. I still would not be leveraged much right here. Be very cautious because we can drop anytime. I think there's an air pocket coming up, tactical air pocket for Tesla specifically, because we will need until April or May until we see real cash flow coming in from robotaxi. And you never know what happens in between. So it's not a time on these market tops to be super leveraged, even though I'm super bullish on the mid and long term, 6 to 12 months. But I would not guarantee that not some stupid little flash crash can happen. So make sure that you survive. As long as you live, you will thrive. That is my mantra. Okay. We have more coming this week. Very interesting stuff. Of course, Meta, as you know. I think MicroStrategy is more interesting than it ever was. We will talk about MNAV also this week. I will cover MicroStrategy. I will give you also a quick preview of what I'm doing here. Look at this. I'm preparing for you guys in PioneerLands.net. Go there, join, it's free. In the Pioneer Academy, especially in the Capital Academy here, CAPAC, I am sharing a little bit my approach to portfolio construction in the age of AGI. Not just Tesla. Tesla's very heavy, but how do I pick the best stocks out of the core universe of AGI that, of course, gets constantly refined. But how do we take a core universe of the most powerful themes in AGI and translate it down into the actual active portfolio selection that can change by the day, of course? How do we do all these things? How do we secure wealth in the age of AGI as pioneers? And of course, we will have a lot of cool things coming up in the Pioneer Academy. We talk not just tactically how to get rich and make your 30+% a year, which I think is the new 10%, but also how we build a larger sustainable economy for the pioneers using AGI and building an economy that is not just there to enrich ourselves as quickly as possible, but also sustainably as a community of the pioneers who understand, predict, and shape the future using AGI and, of course, our brains. So, very exciting stuff is going to come this week. I hope that was interesting and see you very soon.